What's up, people? Welcome back to Invest with T-Claus. My name is Tubby, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So today's topic is Virgin Galactic, but before we get into that, it's worth highlighting a major event that happened at the macro level earlier this week. Fed Chair Jerome Powell announced that not only were they not raising rates, he acknowledged that they have essentially reached peak tightening, short, of course, of something not going to plan relating to inflation easing. But more importantly, we now have 3 projected rate cuts in 2024. This is exactly what I've been telling you about, right? And as a result, the Dow Jones hit a new all-time high this week, and the other 2 indices are also nearing their all-time high. Of course, Virgin Galactic benefited from this boost and closed the week up 7.73%. But that's not all that is fueling its move up. So in today's video, I'll go over the latest news around Virgin Galactic, some key things here that you don't want to miss, then take a look at the analyst ratings, some changes here, and I'll close with where I now stand as far as buying, holding, or selling. As always, this is not to be taken as financial advice. I am not a financial advisor. This is my personal approach to investing and the thought process behind it. I'd recommend watching all the way through so that you don't miss out on any pertinent information I'll be sharing. Drop this video an early like if you haven't already, and smash that subscribe button. Those are 2 easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. I'm sure that everyone remembers that Virgin Galactic had announced that Galactic 5 in November would be the last commercial flight of 2023, with the intent to resume flights in January of 2024. Since I last posted, I received quite a few comments and questions requesting an update on where things stood with Virgin Galactic. The latest major headline, I suspect, was a big driver behind uncertainty many felt or are feeling currently. I'm of course referring to the news that founder Richard Branson was on record earlier this month stating that he would no longer invest any additional capital into Virgin Galactic. This was quickly interpreted as the company is doomed, and even Branson himself knows this and doesn't want to put more cash into a sinking ship. Well, while that of course is always a possibility, his actual reasoning is that Virgin Galactic closed out the quarter with $1.1 billion on its balance sheet. This is an increase from the previous quarter and was driven primarily by Virgin Galactic doing one last round of stock offerings. They issued 62 million shares and raised $211 million as a result. Branson was actually echoing the message current CEO Michael Colglazier providing during the last earnings call on November 8th, which was that the $1.1 billion balance sheet was sufficient to meet all their operational needs and bring the Delta-class spaceships into commercial operations. There was quite a bit covered during that call, so let's start with the punchline and I'll walk you through why Branson comments aren't as scary as some articles may suggest. So the punchline is, Virgin Galactic laid out the path to reach profitability in 2026 during their last earnings call. How did they get there? Well, it all hinges on the Delta-class spaceships. So let's take a look around the unit economics around that platform. The current spaceship, VSS Unity, generates between $1.8 million to $2.4 million per flight based on the mix of research versus standard seats, and Unity can only manage the 1 flight per month cadence. The Delta class, on the other hand, has 2 extra seats compared to Unity, which translates to a revenue of $2.7 million to $3.6 million, and is expected to sustain a cadence of 8 flights per month. Expected total revenue is therefore 12 times greater, with a range of $21.6 million to $28.8 million, right? So that's massive. Because of the massive opportunity this represents, Virgin Galactic is now shifting its business model and focusing all of its efforts into bringing the Delta class to commercial status, right? Which makes sense. They address the fact that as a result, VSS Imagine, that's their other spaceships, will not go through certification. They also conducted a strategic layoff of their workforce, who is not directly or indirectly supporting bringing the Delta ships to commercial state. The other big changes in operation to call out: only 2 space flights would take place in 2024 with a quarterly cadence versus the initial monthly cadence we were anticipating based on 2023. The next one, the 4th seat on VSS Unity, previously filled by an instructor, is now open. The caveat here is that it will cost $1 million, but allows any individual on the wait list willing to pay that premium to jump to the front of the line and secure their flight in early 2024, which can be enticing for some, right? The last big one to call out: all flights will be paused in mid-2024. The focus will then shift to assembly, ground testing of the Delta class, and finally, final certification flight taking place in mid-2025. If Virgin Galactic can execute to this plan, we should see a modest yet incremental increase in cash inflow from flights in both 2024 and 2025, with a major step change in 2026 once the 2 Delta-class spaceships enter commercial service. Meanwhile, overall spending should decrease over the same time period. Some key factors to consider if you're wondering whether or not this plan is feasible: well, for Q3, revenue increased on a year-over-year basis by over 100%, coming in at $1.7 million versus $0.8 prior. Total operating expenses decreased on a year-over-year basis by 20%, coming in at $116 million versus $146 million prior. And net losses also decreased on a year-over-year basis by 28%, coming in at $105 million versus $146 million prior. It's by no means a slam dunk, but we are seeing some evidence in the financials that things are improving, and this is actually feasible if they continue to execute. Now, if we step back and we look at what I've been telling you for months, it has been that as long as Virgin Galactic continues to execute and deliver on its promise, again, we always go back to execution, analyst sentiment around the stock should start to shift, right? Well, we are now at that point. Oliver Chen from TD Cowen, you can see his credentials here as a well-rated 4-star analyst. Well, he reinitiated his coverage on Virgin Galactic with a buy rating, but lowered his original price target from a while back from $7 to $2.50. That rating was issued post-earning call on November 8th, while the stock price was at $1.66. The reasoning being, and I quote, "We remain encouraged by Space's progress towards positive free cash flow in fiscal year 2026 and scalable profit with the potential to yield $518 million to $691 million in yearly revenue based on 2 Delta-class spaceships flying 6 passengers 8 times per month." End of quote. The overall consensus rating is a moderate sell, but as you can see, we finally have our first buy rating. The new pricing range is from $1 on the low end to $4.50 on the high end, expected over the coming 12 months. And as it stands, we are already past the average price target and smack in the middle of that range. And so what do I make of all this? As I said, Virgin Galactic is up 7.73% this week, but get this, it's nearly 34% since the buy rating was issued on November 8th. I've consistently told you 2 things this year. 1, so long as Virgin Galactic continues to execute, analyst sentiment will shift positively and buy ratings will return. 2, short of something catastrophic happening at the macro level, rate cuts will go into effect next year. We're now seeing the start of that momentum shift, thanks to both Virgin Galactic executing and the macro picture improving. The reason lower interest rates matter and why I've been paying attention to it, right? Well, it makes the cost of borrowing cheaper and opens up another avenue for Virgin Galactic should they need more cash versus diluting investors further, meaning that there should be no additional pressure forcing the stock price lower due to increasing share supply, at least over the next year. So personally, over the last month, I've added 700 shares, bringing my total share count to now 4,700 shares, and reducing my average cost to $4.55. And really, the last thing I will say here is this. The road ahead is still going to be bumpy. Let's not sugarcoat that. And with the 50-day moving average sitting at $1.91, do not be surprised if we revisit that price to confirm support before exiting the sub $2 range once and for all. The everything rally, and this is what I want you to remember, should take a hold next year with all 3 major indices making new all-time highs. If Virgin Galactic can continue on this trajectory, they too will be beneficiaries of the overall market moving up. And so really the way I think about it is just this: with enough cash on hand to see this through to 2026, the downside risk on Virgin Galactic is minimal at this point. Again, I've said this before, but my opinion is that they either go to 0 or they skyrocket up, right? Everything I'm seeing firmly points to the latter. So my new goal is to reduce my average cost to under $4. The upside here, in my opinion, is significant and for me, well worth the risk. But on that note, that is it for me today. If you found value in my content, click the like button and share with others who you think could also benefit from it. For my newcomers, subscribe. Let's get to 1,000 before the year is over. And don't forget to ring the notification bell so that you too can stay in the know. I'll be back on Sunday for my weekly video. Till then, you can keep up with me here on Twitter for crypto and NFT related news. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.